Greetings, everybody. This is Jeff Scott, and this is my top-down review. And you know what's missing? I'm missing a date. So today's date is, well, by the time you see it, will be 8/9/2020. Now, I titled today, Pause to Refresh, Market Rotation, or Shot Across the Bow, because I think I can make the argument for each of them. Friday was a pretty tough day, especially if you were in large cap tech. Now, was that just a pause on a continued upswing to infinity and beyond? Was it market rotation to the beaten down stocks that have struggled off the bottoms? Clearly it was. Or was it a shot across the bow to the whole market to remember that it's August and things don't always go up forever? So let's take a look from a top-down review on my usual weekend update. Change a few things around here. As always, this is for education purposes only. I am a doctor, not a broker. I do not have nor ever intend to have Series 5, 7s, and other licenses that will allow me to give you investment advice. I am independent. I pay for the tools that I use. And trading involves risk, and you alone are solely responsible for any investment decisions you make. From time to time, I'll actually introduce you to some new tools. Sometimes I'll even offer a link to purchase them. The key thing you should know is that I never get paid. I don't take a penny, and any affiliate fees that might be offered to me are given to you as a bigger discount. I'm not going to spend much time here because I'm doing it every week, but these are some of the influences I had. I'm a scientist by training, physician, researcher. But when it comes to trading, I just learned from other people, came up with my own style of trading, and I call it Be Your Own Guru. I own a lot of software. I need TradeStation and Thinkorswim and the specific indicators and strategies that I use. And then for analytics, I use Hgsi, EdgeRater, the Q, and Dr. K tools. And as it says down there, I'm never paid when you buy something because I recommended it. Here's the website for highgrowthstock.com. I am not affiliated. Don't get anything if you buy it. But if you do, if you go to it, it's great. Investing strategies will have hundreds of movies by myself, Ron Brown, and others, and free 30-day trial if you click on that link. So we start with where we at in the market. This is August. We should be having a tough time, but I guess the NASDAQ probably felt like they were starting to go down the road to fear, but the rest of the market, even the small stocks, seem to be ready for another leg up. So I think there's a lot of indecision, and I'll be looking forward to seeing the market open on Monday to get more insights, perhaps some from the futures, because I do think that this is a market that can go either way. And therefore, I'm pretty much all over the place. I did buy some protection on the high-tech big cap stocks with some QQQ puts, SQQQ long, but that's like a $5 ETF. It's hard to make money on that, even if you buy hundreds of contracts. I did raise cash and have smaller positions. But then on the other side, you look at things like Generac, ITB, a number of stocks on the industrial side, utilities, and you want to be long them. So I've got a mixed portfolio at this time. When you look at the sectors on Friday, you can see there's a hell of a lot of green. And certainly in some things like real estate, utilities, industrials, and even staples, almost everything is green. But clearly in technology, healthcare, communications, there's clear weakness, and that impacted on my behavior on this week and what I did at the end of the week. Major markets always tell me a big story, so let's go take a look at some of the major market ETFs. And we'll look at the daily charts on the futures. And as I've said before, I like the futures because it gives me more information. Here is the E-mini futures. So bullish or bearish on this chart? You got to be bullish. You're at an all-time high on the on-balance volume. You have a steady run off the bottoms from March 23rd. And if you look at where we're at, we're just below the prior highs. So we certainly have risk of forming a double top here. I'd expect a lot of resistance around the 33.95 to 3400 level, but we still have a little room to go, another 50 points before that comes into play. Could we roll over from here? Absolutely. Do I see it on this chart? No. If I look at the NASDAQ futures, they look a little different. certainly a big run up, but they've become a little bit more choppy over the last few weeks. And one can see on Friday a big red bar. Now there's something else you might notice on Friday. We set the all-time high intraday on the NASDAQ futures on Friday, and then we sold off. Now, when you go back and you see sell-offs like that, it's not unusual to see a couple of days of sell-offs, but you don't have to get a couple of days. This might be what I'd like to see, which is an open up lower on Monday and trade higher the rest of the day and begin another leg up. But I think you got to at least be paying attention to that day. It looks different on some of than what we've been seeing of late. If we look at the Dow futures, the YMs, also a nice run up, not very steady, but it's above its moving averages. The 17 and 50 have now crossed above the 200, and it still has a ways to go to get back to its prior high. And then the Russell futures, which this is not a high. The high is much further to the left, look a lot like the Dow, and again, have cleared its moving averages, and the 17 is above the 200. The 50, the Golden Cross, maybe occurs this week. So I don't see anything there that makes me overtly bearish, despite the fact that I lost money on Friday. If I look at the VIX, you can see we've broken down below the 200-day moving average. That would have to be considered bullish. And if I look at the dollar, we had a big up day on the futures on the dollar on Friday. There's no question that the falling dollar has been supportive of this market run. It's certainly been supportive of the major bull market in metals. So if that's a fundamental change in what's going on, that might be negative for the market as a whole. If I look at the weekly charts, again, let me set this the right way. You can see the long runs that we've had, and you can see here on the Russell futures, nowhere close to the prior highs. Here we go. Here's the prior high of the Russells is back here in 18, this is 19, and then this is 20. Rates trickle higher. I like to look at what's driving the market underneath, and just a little bit of a move up on both the 10-year and the 30-year, not a big difference. The AD lines, what I find most impressive is on the large caps, we're at a new high. You can see the stocks are almost at a new high as well. If I look at the mid caps, small caps, not quite to new high in the AD line, but moving up. The stocks clearly lagging. When I look at the NYSE, we are not yet, at least on the weekly, at a new high. And you can see pretty much all the ETFs, except in blue here, the TLT turned up on the week. Breadth remains strong, but not overbought. I might almost say, but close to overbought. You look at the stocks above the 200, and you see about 40%. You look at stocks above the 40, you see about 75%. And think about what that means. That means that you have the majority of the stocks in the market right now, or many of the stocks, are above their 40, but less than their 200. That implies that the 40s day moving averages are below the 200, so below where you'd see a golden cross. So it's hard for me to accept that a market where most of the stocks, the majority are less than the 200-day moving average, is overbought. If I look at the T2121, you can see, however, that we are at the overbought line on the 13-week new high, new lows. And it'll be interesting to see if this leads to a little bit of a pause here. That's where some of that pause to refresh comes in. And again, I think there's probably something to be said about all those airlines and casinos and hotel stocks that are still way below their 50-day moving average, but they're hitting 3-month new highs since they broke out on March 23rd. Maybe that is skewing this to some extent. On the McClellan, I'm looking for divergences. I'm looking for zero line cross or rejects. I'm looking for extreme readings. And I guess what I'm going to look at here on the daily is we're not quite to an all-time high, but let's say we take out that all-time high on the S&P 500, and we remain with a pattern like this on the daily McClellan oscillator and summation index. That would be a clear divergence and will be a bearish development. And here's the weekly, no zero line reject there, similar story. The buckets, these are another way of looking at how overbought, how oversold the market is where we take all the stocks in the S&P 1500 and we ask the question, first, are you above or below the midline of your Bollinger Bands? And the second question is, if I take the bottom of the Bollinger Band at 0, the top at 100, and make 10 percentiles from 0 to 100, and then have 1 less than 0 if you're below and greater than 1 if you're above, where do the stocks sit? And you can see here 80% of the stocks in the S&P 1500 are currently trading above the midline of their Bollinger Band. Very bullish. And notice here that now over 20% are above their Bollinger Bands. That's getting to a place where, again, I don't have to see a big correction if we're in a bull market, but to see a pause to refresh, maybe some rotation, would not surprise me. Hindenburg omens. Boy, these will save your bacon, but they don't work until the market's at a new high. So no signal on the NASDAQ or the NYSE. Market tone, the Woody indicator, which will be the center thing here, all green, so that's a positive if you're bullish. Now, I like to do retrospective analysis, so I looked at the different stock groups that I put together last weekend. In red, you can see all the growth things, the filtered buys, trilogy buys, the weekend review from IBD, My Holdings, IBD 50, and MarketSmith. Now, they range from 1.5 to 1.9. That's a great return in normal weeks, but they were a lot better on Thursday night. They sold off probably half of their weekly gains on Friday, and I hate when I do that. Sorry, too sensitive here. And you could see that the leaders this week were actually the junk. Best stocks under 15, 3 times volume, bottom fishing, float under 7 million, stocks and groups the upside $1 to 15 to the downside $1 to 15, shadow stocks 0 to 30, stocks and groups moving to the downside. Those are not the typical high growth stocks that we see. So that's clearly a change in the market. And if we look over here at the warehouse report, you notice the angles from upper left to lower right. And that's telling me that the low growth stocks actually did better. In fact, if you look at EPS rank, the best return was for stocks at almost a 0 EPS rank, a low relative strength rank, a weak group, and stocks that were distributing a week ago outperformed. A week ago, we talked about growth had a good week. So this was a catch-up week for the non-growth segment of your portfolio. I love the Q tools, especially for understanding what's going on in the market. And it's not an alternative to Hgsi in my mind for top-down investing because it doesn't have built-in charting and it doesn't have all the indicators. But it allows you to do some top-down analysis with a fundamental flair. So let me just give you a taste of what I do. So this is on my computer all day, 24/7, as I'm in the market. And it shows me in blue today's performance, magenta yesterday's performance, and then, in purple is today, blue is 2 days, and then that whatever maroon color is 5 days. And it gives me a sense as how each sector has done over the last week. I can also look at a pie chart and see that this week, all 11 sectors were up, and you could see 100% advancers on the sectors over 5 days. Down here gives you 5 days, 10 days, and 30 days. And you could see looking out over 5 days, industry groups are predominantly up, as are stocks. But as the week went on, there were more and more stocks that were negative AD lines. Strong week. Sectors are strong. Then I went on Friday and I said, show me, in the first thing here, what the return is today of the stocks rolled up in the various sectors. And what kind of a day do you usually see when a sector is up 7%? That just tells you how incredibly strong industrials are. 7% in the last 5 days, 13% in the last month, only 2% in the last 2 months. So this is a turnaround at play. Industrials, energy, and materials leading on Friday. Now, sometimes I'd rather step back and instead of looking at leading this week, not look at what's leading over the last 5 days, but how about what's leading today? And on Friday, we had financials, real estate, utilities, and industrials. Things that I've been playing, communications, IT, healthcare, were on the bottom. So I look at this and I'd like to understand, is there anything within financial, real estate, and utilities that I might want to buy? So all I need to do is highlight those three groups, and then I hit the gears and I open up from sectors down to industry groups, and I've ranked them for one-day performance, and you could see which are the leading industry groups here. Now the same thing, let's select perhaps the first 5 of them, hit the peers here, the family, and then on the next slide I pulled out part of the sheet of stocks that are ranked on fundamental and some technicals. I can hit these 3 stars here, and that'll bring up the most undervalued good stocks that I can find. And the stock that it selected for me is a company called Customers Bancorp. These are purely driven by fundamental. In this blue here, it tells me that it's very, it's undervalued, not overvalued, undervalued. Doesn't have great earnings quality, that's too bad. And it's got a lot of potential for a short squeeze. I looked at other stocks within its industry group and its peers, and 100% of them had a positive AD line. I can look across, it's $13.28, 418 million market cap. It's making $2.40. This is the problem with the stock. It doesn't have enough volume. But then I ran it through here, and it was the best of the bunch. I don't think I'm going to chase a stock with that little volume. Someone like David Ghilardi will come in and buy up all the volume and hurt me. Just kidding. But I think it's too thin for me to look at. But it did send a message, which is when all the stocks in the regional banks are green, regional banks are strong. If I look at the canaries in the coal mine, we did pull back, but this week we had a steady up move until Friday. We're still above the major moving averages, and I want to be a bull. I'll say that's a bullish looking pattern. Know your news and earnings. It is a mixed week on news. We got the monthly unemployments out, but there's still plenty to happen this week, and we're not done with earnings week work this week's yet, folks. It's another busy week of earnings. Novavax, one of those vaccines that'll save the day. Tilray, and Once Strong, pot stock, Marriott, Barracks, one that I've been in. Some of the energy stocks or the utilities, Duke Energy, Sunrun. You need to look through there and see what stocks you have. And as I say in the lower right-hand quadrant, it is a judgment call to hold stocks over earnings dates. It is bad judgment to not know when your stock's earnings date is scheduled. So, strong week for stocks as the S&P 500 closed higher in every session for a 2.5% weekly gain. The Dow rose 6% on the week. The Russell rose 6%. The Dow 3.8%, and the NASDAQ was the laggard at 2.5%. Despite the strong week, there was widespread weakness among big cap tech on Friday. Some of the breadth have shown mixed signals. Some of this is probably related, as I said, to the number of stocks that had considerable moves off the bottom rather than an extended market. However, as we approach the old highs, I will be watching the Hindis closely. I expect news flow to continue to drive the markets, but the indices look to me like they still want to go higher. I wonder how much the pain on Friday was indeed profit-taking on big winners in anticipation of summer doldrums, and I'll be looking for something to trade early on in the week and seeing which way the market goes. I don't think this sentence here makes any sense. I obviously dropped a word, so I'm just going to kill that sentence because I don't know what I was thinking. What are some of the key news drivers out there? You know all these as well as I do. Will Congress agree on stimulus? Trump on Saturday did do an executive order. I'm sure that will be tested in the courts. If anything, Congress does not want to set precedents of expanding the role of the executive order. Has market priced in a Biden win with resultant changes to estate and corporate taxes? What a market sell-off in light of the potential raise on $1 million of capital gains. Do we take our gains on some of our big winners like Amazon before the end of the year so that we don't have to pay 39.6% if Biden gets his wish? It'd be interesting to see. And the weak market acted like, this week the market acted like COVID is under control and a vaccine will allow normalcy. What happens if back to school fails and we start closing up again? So for me, Friday turned a great week into only a good one. I'm up 110% of my portfolio. That's cash dollars, looking at my P&L based upon what I started with. I have become a bit more defensive. I rolled up calls and out, harvested profits, and holding some contras into the weekend. I believe the market goes higher, but there's still significant risk to the downside. So at this point, I'm going to move to my usual top down. First, all right, we're 20 minutes in. I know my son always complains I spend too much time on the first part, but the reality is the most important thing I talk about is the market, because how you perform tomorrow, or excuse me, on Monday, which may be tomorrow by the time you see this, it's probably 100% dictated by what the market does, no matter how good of a stock picker you are. All right, so I always like to go into TradeStation and do a couple of quick things. I sort of have a number of things I like to look at on the futures or indexes, doesn't matter, to give me a sense of where I'm at in the market. So this is the E-minis. As you can see, as we showed you before, a nice steady uptrend. A couple things to notice. Number one, it's in a John Person buy signal on daily, on weekly, and on monthly. Awesome. Second thing, it's got a green paint bar on daily and weekly and monthly. That's bullish. That's an Alexander impulse indicator. When it's green, I can be buying or holding. When it's red, I should be shorting or holding. And I just had a bunch of treats. And when it's blue, I can be doing whatever I want. Third thing I look for are those little red dots above it. And sometimes when the market has been sold off a lot, green dots below it, that would be symbols of a MACD divergence, which might suggest that the trend is starting to lose a little bit of power. And the dots are great, but in reality, let's see if I can fix this here. My platform toolbars there, got all that, got all that. All right, in reality, I could just get a trend line, and clearly we got higher highs here. I don't think there's any question about that. But if we look at the MACD in comparison, we got lower highs. So we got a divergence there. So that's something that says that at some point this is going to end. I look at where we're at within the envelope. We're in the middle. I look at my high jump bar. It's at 91%, and this is using the older high jump. Let me add the new one because I'm moving to this one, and thanks to my buddy who saw me complaining about the high jump and made one to meet my desires. That was really nice. That was a great surprise when that showed up in the emails. I wish I could write script, but we all have different talents, and that's not one that I have. I want the high jump that goes between 100 and minus 100, and that's this here. And the reason for that is I want it to go from the lowest low to be minus 100, the highest high plus 100. And I find that it shows me I'm not nearly as overbought. So the high jump here that I'm going to pay attention to is at 70.68. Weekly bond goes green. There's no reason why this can't go higher. The divergences be the only concern. If I look at the YMs, probably a quick analysis. Buy signal doesn't have the MACD divergence. Otherwise looks the same. It's at 43%. More room to go. If I look at the Russell 2000, it's got the MACD divergences. Otherwise looks great. 61%. If I look at the NASDAQ, probably the biggest runner of the bunch. And frankly, we'll talk about that with the high jump. In a buy, it's blue because it's had a little bit of pressure on it. It's got the MACD divergence dots. And if we go down here, it was a high jump was 95.36 on the new way on Thursday at the close. That tells me that this was the most extended it's been, the 95th percentile over the last year. No surprise that we gave something back. That's what you expect to see, and that's why I follow it. You want to see what looks horrible, look at the VIX, and you can see, interestingly, that's not the VIX, that's not the VIX, that the VIX has got those green dots suggesting that we have less negative MACD histogram, and we have a bullish convergence, but it's got a ways to go probably. And then the other things that are important to me here, I like looking at the US dollar, which would be right here. And you can see the dollar had those green dots saying it's going to bounce, it's going to bounce. In fact, if we look at where it got on the high jump, if you look at Thursday, the high jump was minus 92%. So it was getting down there. And then on the next day, 91%, and then we bounced. So the fact there's a new person buy signal suggests that metals may have a few days to deal with before that reverses. And speaking of metals, big run on gold, big run. Still in a buy signal, but lots of MACD divergence. And you could tell here that its high jump got 100% on the new version. So clearly we were overbought on the gold. And let's see if silver looks the same. Yeah, silver the same way. So not a shocker that these things pull back. The question would be whether it be a shallow pullback or more. We already looked at Thinkorswim. So normally what I do, and I've had a couple of requests of things that people ask me for, so I want to do those as well. Normally what I do on my weekly reviews is that I open up my designer. I go to market analysis groups. I go to Major Markets Plus. I hit the warehouse view, and that opens up, let me size it the right way, a warehouse view. And since I'm looking at ETFs and indexes, I typically like the top-down view. This is looking at predominantly price and volume. 1 day, most important, 5 days, second important, and then 3 weeks, lastly important. When we look at it and we rank by raw combo, which is always important to do, you can see small caps, mid caps are up at the top, gold, biotech, semis, IBD 50 stocks, NASDAQ 100 on the bottom. So if you lost some money on Friday, but you've been making a ton of money, no shocker. It's because those are the stocks that sold off. Now, will they be a one-day wonder, or is it the beginning of something bad? I think that's something I can't tell you. We'll have to watch and see. I can say we've been here before, though. Let me open up this. Let me open up one more window, which will be a weekly chart. And I'm going to do the Chris Wilson chart. Okay. So, very quickly, here was the prior high. Fibonacci retracements. We are nearly back to 100% off the bottom. I think that I would be surprised if we don't at least go and touch it. So, do I see anything here on the S&P 500 that says we're done going up? Nope, I do not. We'll be done eventually. Could be done on Sunday night, but right now I don't see something that says we have to be. Dow Jones Industrial much lower in its area, kind of at right above the 76%. And I think my goal here is to have it come back up and test the prior highs. Double tops are things to short, so we'll see what happens if it gets there. Again, everything's green. I don't see anything that says it shouldn't get there. But, you always have the markets. And the markets, I never try to overrule the market and tell it what it's supposed to do. The NASDAQ, look how strong this is. Unlike the others, have taken out prior highs. If you go back and look at that February highs, we are already at the 138% retracement. So if I was a Fibonacci guy, I might say, hey, we hit my target. It's time to pull back. And I do think that's possible that that's true. You can see a red candle high, the high jump maxed out. I think this looks the most at risk of pulling back further. But I would have said the same thing multiple times. This day and then the next day we had a pullback and we turned around. It wouldn't shock me if that's what we do here, but I think there's got to be cautious. And if I look at the Russell, we'll see it looks more like the Dow, where the good news is the 17's above the 200, the 8-day exponential's above, and the 50 is about to cross. I don't see anything negative there as well. So I think the markets will do what the markets will do. I don't see any obvious reason why they have to stop going up, except they've been going a long way. And the one that looks at most at risk still, until changes occur, is the NASDAQ. I mentioned the IBD 50 stocks. You could see the pattern here where, and if you look at a lot of high-tech growth stocks, you'll see red candle highs, and you'll see a low close doji here and a down day. Now, is this over? Heck no, it's still above the 8-day exponential. It would not shock me for it to bounce. And on the weekly, you see a topping tail over there. And then if I look at the IBD 50 momentum, this one actually led the breakouts rather earlier. It's had a little bit of a pullback as well. Already mentioned that the dollar had bounced, and Hgsi, you could see it here. Doesn't look like much. We'll see what happens. The VIX, we talked about being low. It's broken down below the 200-day moving average. Still not quite down to where it was living before the market sell-off. And then mentioned that gold was weak. Let's just look at the ETF here. And you could see sort of a evening star reversal pattern or a low close doji, and one that could result in a bit of a pullback. Still, though, above the 8-day exponential. If we look at silver, I don't think it looks quite as ominous. Closed back almost where it opened. And if we look at gold miners, which had been doing really well, I sold my gold fields early in the day on Friday, pulled back a little bit, actually had a PSAR flip. So again, am I really bearish on this market? No, I think this market is overdue for a pullback. I think there's a lot of news flow that suggests to me, we're in August, but I'm still positioned for it to go higher, but I have to be nimble in case it doesn't. Typically, the next thing I do is I go to industry groups, hit warehouse, and I should see 175 rather. And if I look at 2-day force, I can see 65 or up. That is bullish versus only 30, that one, because here we go, versus 18 down. So very bullish on the short term, even with the Friday pain. Precious metals, still the worst on the downside. Application software, educational services, internet-based, internet media. All those five are sort of in the high growth stock group. So when you start to see a lot of stock groups that we might be searching for to the downside, that has to warn you that the stocks that we trade here may have been out of favor this week. Let's look at what was in favor as the week ended. And I think it's kind of interesting. Biotech. Biogen is probably one of the biggest of the biotechs. And a lot of these big moves up and down have been related to information on an Alzheimer's drug. Do they have a treatment for Alzheimer's or do they not? On Friday, they actually filed a drug to be considered for approval in the U.S. for treatment of Alzheimer's. I don't think it's a home run, but anything approved is a big deal. It still has to go through that process, but you had a kahuna, a big gap up, switch the weekly bongo to green. And let me switch this to a stock and see if it was a Bible gap up too, which it probably was. It was as well. And you can see I've got the new high jump, which should be coming out any day now from George. So this looks interesting here. The bad news is it's been a sideways move and you're kind of buying it in the middle of the channel. So it's not my high growth stock. Now Sereno, this thing's been around for a while. It's really taken off of late. I think COVID related. Don't know enough about it to tell you what to do. From a chart perspective, it's had a bit of a run. In fact, went up 50% or more this week. I have a hard time chasing that, but it's certainly something to look at. Remember, you can right click, go down to where it says more info from web, left click on FinViz. It'll actually open up with that stock and you can start to reading here. Jim Cramer, buyers, it's time to look in the mirror. Clueless investors just keep driving the stupidly bullish stock up higher. The next bull run will be harder for Sorrento. Those aren't reasons why I want to chase. Maybe you think differently. I have no idea what Hgsi Therapeutics do. Again, would I chase it up here? No, because let's see how much volume it had. 21 million shares on a stock that usually does 500. So it's got 40 to 50 times its average volume. This stock, if I was a guessing person, may go up a little bit more, and then it's going to come down, bounce around, and then the next time it breaks out above this area, I might be interested and I do some research. But you could see it did it here, big run up, came right back down, and now it's running again. I don't chase these. I've learned over the years that that dogs that chase unruly cats often get clobbered by cars. Novavax, coulda, woulda, shoulda stock. I sold out of this stock around here in this gap. Boy, I wish I would have held it. I'd be up a lot more than 110% on the year. This is one of the vaccine companies. Interesting here when you look at this amount of earnings. I suspect that has to do with the payment they'll get from the government for the fast tracking and their warp speed initiative. This could go higher. I've seen it have $300 price targets. It's just expensive, and it's going to be all over based upon COVID. Coherus actually had earnings that were a surprise. They're a biosimilar company. I'm under NDA, so I'm not going to say a word. And then I get to the index. So when I look at biotech, I don't see anything that's really knocking my socks off. There's a couple of interesting ones. Removable energy. Funny thing about Plug Power. This looks playable here. This looks like a nice pullback and then a breakout from a flag. This is a stock that's done that pattern that I just described over and over again over the last number of years. Maybe this is the time it's going to go up and be real. See, it ran up here, came right back down. It seems to have changed its colors. I do my homework. This was an interesting looking pattern. First Solar, it's Bible gap up, but it closed in the lower half. I'd probably pass, find something like better. I'm currently in end phase, sort of a cup handle breakout. Tough day on Thursday, doji on Friday. I look for this to go higher this week. Canadian Solar, Bible gap up this week. Solar Edge, probably the best of the bunch. It's already had a big run. Sun Power. And then Sunrun's had a great story. Giving you opportunities to buy on pullbacks, but it's pretty much running. And look at that earnings per share growth that was anticipated. Courier services, well, everybody's shipping everything because they don't go shopping. You can look at UPS, too far gone for me. Great to hold it. Stamps, well, I gave this one out not long ago. What a nice move it had. I think I told people here, my neighbor Kathy, I know bought it here. Wish she would have held it, but she does too. But you know what? You take 30, 40,000 profits, you put it in the bank, and you go to bed with a smile. It's about taking the money out, not having pretty charts. FedEx, a little bit more easy for me to buy this here than buy UPS. Breaking out, but it's breaking out of a pretty substantial down channel. So I'm going pretty quickly on these. I'll go through the first 5 or 6 or more, and then we'll do a couple of things that we'll request. Casinos and gaming. I'm really troubled with these. Are people going to go back to the casino? I was on a plane in San Francisco 2 weeks ago to Lauderdale. There were 30 people on the whole plane. The airport was empty. As I understand it, there's not a lot of entertainment in Vegas. Same rules in the restaurants as other parts of the country. I just don't know it. Maybe it's all because this is a local gaming. They must have had news and some earnings out. But you could see you had an opportunity off the 50 to buy it about a week ago, and it's breaking out and running. MGM, easier to buy down here, but you got this 200-day overhead. So, do you want to buy it for 15%? I got no problem with that. Then you get to the index. I usually don't go below the index. Banks, regional banks look the same. They look good. This is a typical regional bank pattern. Mobile breakout from a squeeze, pocket pivot at Kahuna, bullish convergence on the person market catcher, in a person buy. I think that looks very buyable. This is the standard bank story. You can look at a lot of them. Trust Financial, same picture. U.S. Bancorp, same picture. Carver Bancorp, even better looking picture, but there's probably not a lot of volume. There's plenty of volume. But the same basic picture over and over. First Horizon. So regions, I think regional banks look interesting here. The easy way is just buy KRE, which is an ETF for regional banks, and it's got the same pattern. I think regional banks look interesting here. Specialty pharma. Horizon's been a racehorse. Bible gap up on Wednesday, sideways move. I don't have a problem going into something like this, but I would put my stop probably no less than the bottom of the Bible gap up day. It's got earnings per share growth. It's in a good space. It's got revenue growth. Beautiful chart, especially if you're in it. Guardant is a precision oncology testing company. They're really cool. I'm a cancer doctor. Instead of having to get a biopsy and send a piece of tissue to understand the molecular profile of a patient's tumor, I can send blood. It used to be mostly a lung cancer play, and this week they got an approval for the FDA across all tumor types. So that's very exciting. My guess is this goes higher. When this stock was an IPO, it went through the roof. FibroGen, I don't know anything about this. I had a little bit of a move up on Friday. Doesn't make any money, so it's one of these. Well, it's got some revenue, so you can look at that. Acer, don't know anything about it, but I love the pattern of a stock that's gone sideways forever and now starts to break out. Here's the weekly. This is exactly what Tandem looked like when I bought it. I am going to take a look at this one further. It may turn out to be a trash stock. I don't know. I like the pattern on Revance Therapeutics. Strong uptrend, pull back to the 50 and a breakout. The only thing I don't like is it closed at 26 and it started down here at 23. If I go below the low of the day, that's a pretty big 15% stop loss. That's probably too much for my taste. Jazz. All right. So there's a lot of interesting looking charts. REITs. Back. This looks like a regional bank, doesn't it? Beat up, gone sideways. Now it looks like it wants to move. Mobile breakout from a squeeze. Person indicator, bullish convergence, and a kahuna. Host Marriott, Ventas, Healthcare, Senior Citizen Homes. Boy, it looks like it wants to take the 200 and keep on going. Pays a 6.8% dividend. Crown Castle does the wireless towers. Pretty safe business, especially in the 5G land. New buy signal there as well. Welltower, another senior living. And, with all the COVID, it's really called out the need to improve those facilities. And Equity Residential. So I go through the top 10. Quick word on exploration, production. They all look like this. This is the pattern. Now, you notice they're all the upper part of their high jump bar, even though they're not extended stocks. And that's just because they've run a lot. This has run from 2 to 8.5. So they've run a ton off the May 23rd low. So, it's a lottery pick. It's like buying an option that doesn't expire. As Dan Fitzpatrick says, you can buy like a millionaire. It's got a high closed doji. It's probably worth owning one of these. Is it Range Resources? Is it Cabot? Is it Devon? I like the multiple kahunas here. These are beaten up stocks. EQT is a shale company. It's already broken out some. Not what I would say great rah growth stocks. Look at airlines. I mean, is this really what we want our portfolio to look like? Now, it certainly is possible that we've seen the low in planes. We may get an executive order. Maybe it was in the one that happened today. Maybe that executive order says we're going to give money to the airline stocks. Maybe it's going to say we're going to give every American a voucher for an airplane ticket. And that way, Instead of giving the money directly to the airline stocks, we'll give it to people to take trips, and the money would go to the airlines. And that's my dog, so I better go let him go make because he's giving me a signal. I'll be back in a second. Sorry about that. So as I was saying, does this look like a high growth stock that's going to the moon? You know, maybe with some help, not weekly though, who knows? But as you look through the airlines, that's what you're going to see. So clearly, in a week where people are feeling good about COVID and vaccines, one would expect airlines, casinos, retail to go up. And in a week when people feel bad about COVID, you'd expect to see testing companies, vaccine companies, and high tech do well. Specialty apparels was the next. And again, TJ Maxx probably looks pretty interesting here. Just we took the 200-day moving average coming out of a squeeze, person buy signal, bullish convergence, multiple kahunas and pocket pivots. I like that one here. I'm already in Lululemon in this group. I mentioned airlines, and similar story could be said about department stores. Every day another one goes bankrupt. But if it's done going down, do you want to pick up Kohl's at a deep discount? Two kahunas, mobile breakout from a squeeze. Very dependent, in my opinion, on what happens with COVID. Cruise lines, another thing that has no business going up unless COVID goes away. And again, positive day for COVID, cruise lines were up. So that's my top-down review. I'm going to let my dog in, and then I'm going to switch and talk a little bit about some of the questions that people ask me. And I will be back again momentarily, although you won't know that because I'm just going to put you on pause. Okay, one of the first things, and actually I appreciate my neighbor Kathy finding it and talking about it, because I forgot to tell you about it. And that is, let's say you don't really want to do a lot of work, and you've got 20 minutes, 30 minutes to take a look and see if there's any stocks that are interested in buying. I always recommend you go through your own stocks real quick with whatever chart makes sense to you. But if you look in the Hgsi custom groups, you will see the Hgsi top 50. And if you look in the top 50, you will see the most recent day. Whenever you upgrade Hgsi, intraday or after day hours, these are calculated, which are the smart groups. Now, before you say, but Jeff, mine doesn't look like yours, go into File, Manage Group Subscriptions, and pick the ones that you want to have. So I asked Kathy, do you know where this top 50 comes from today? And she didn't, so I'm going to assume most of you don't either. It's a simple story. Let's say that one of the best groups is Woodward and Brown Best Of. And there are 10 stocks, give or take, in there, plus an index. And you decide, or I can tell you, that Digital Turbine is APPS is a great stock right now. Okay? Now, if it's a great stock, it might show up on a lot of different searches. So we actually are able to run all the searches on the cloud. Every time you update, these searches are pushed to your computer. And the coolest thing is the program automatically looks to see which of the stocks that are on the most groups to the upside, and you get this list. So if you want to look at potential leaders, this is a good list to look at. Now, it doesn't mean you're going to like them all, but even before I get there, let's look at the characteristics of this list. Of the 50 stocks here, all of them were up on 1 day and 5 day. All of them have positive force. Their ERGs are all over the place. You know, 2/3 are above 240. Some may be less. You look at the accumulation distribution, and pretty much they're all A and B. Biogen, which we showed you had such a big day, is the only one that's not an A and B. And then you can get an idea of what industry groups are working. All right, so this top 50 group is a wonderful group to do your searching from, especially if you just want stocks that are working right now. Now, all of us have our favorites. I have my own favorites here. 3X Big Volume, is one that I like to use. I like my pullbacks to the 50 with a Kahuna. Why? Well, let's pull out one. I don't know if any of these are going to be perfect. Switch to a daily chart. So it's pulled back deeper than I want, but I'm looking for stocks that have pulled back to the 50 and have a Kahuna. Sometimes I find some really good stocks there. So these smart groups, you have to activate them, but they come with the program. This thing here that says user smart groups, I'm working on a beta of the program. It's not active yet, so I can't even tell you what it is. Now remember that think of the designer window as a file cabinet, and within that file cabinet are three types of drawers. The top drawer for your references of all the different stock groups, ETFs, etc. This is automatically maintained, including splits by the program. The custom groups and the smart groups are the things that are automatically calculated every time you update them and push to everybody that's checked them off. And then the user groups, this would be your own file where you can build your own things like I have here. Okay, what else did I want to show you? Now, I like to start with all securities. If I hit the warehouse view, you can see I'm just going to go to a scorecard, no filter, all stocks. There's 86, 89, 67 stocks. The scorecard filter is set up, and we can look at the combo. And the combo is a scorecard. It says locates top stocks to trade based on both technical and fundamental factors. So I will typically take a list of stocks. Now, the reason why I went from 8,900 to 2,700 is I bet you're going to see some filters. So I want stocks above 5. Here I put 150,000 shares and not a group index and not a sector ETF. So I filtered the 8,900 stocks down to 2,700, and then I've ranked them on the basis of fundamentals and technicals. And then I make sure that I'm ranking them by raw combo. And as you look at some of the stocks that come out, you'll see great stocks. Now, these have many of them have run already. UPS we looked at before. Obviously, has had a big run. First Solar, Pool, Jinx, Top Build. Now, one thing I like to look at is I like to look at the big winners and see, is there a pattern that I could have done? So as I look at Pool, and this is a big winner, when should I have bought Pool? Well, to me, the ultimate buy point would have been right here. Why? You've got some bullish convergence on the person market catcher, a mobile breakout from a squeeze, person indicator fired, pocket pivots, and a Kahuna. I also could have looked in this area here where I had a pullback and maybe back here. But the optimal buy point, why do I look for this mobile breakout from a squeeze, pocket pivot, Kahuna, and a new person buy signal? Because that's typically when I see these big moves start from. Let me just pull up, well, end phase. I'm in it. Why am I in it? I got in it a while ago, and I got in it back in this area where it broke up here, and I've been in it for quite some time. That's my style. I try to get in early and ride them. But this looks good here too. Pocket pivot, a mobile breakout, in a person buy signal. I could be living in that. So I like to look at some of the big winners and just get a sense of where I might have tried to buy them. And did it make sense? Chegg, I know when I got into Chegg. Here's the time to get into Chegg. A Bible gap up with a Kahuna. Here's another time to get into Chegg. Mobile breakout from a squeeze, pocket pivot, Kahuna, and this green thing here is a Eureka on the market. So it's always good to take the big winners and go back and look at them. I think I confused somebody because they thought that the point score had to do with the boxes. No. Ian's point score is a list of stocks that have a lot of great HGSI high growth stock features. And that's a great list. Now, one of the other questions that was asked of me, look at Pitney Bowes, by the way. a nothing stock and it's breaking out. And I saw it last weekend when it did this, and I just passed on it. It's an old name. That's an interesting looking stock. I had a question about how do I make these boxes. It's very simple and very cool. So I want to change this to default view. And let's go into here and all right, we're gonna edit that, and I'm gonna make it, I can use black. We'll go ahead and we'll use black. So this is a simple chart, and we just see, hold on one second. And most of these charts have a lot of stuff on them, and I really don't want a lot of stuff. I'd be happy just to have, let's see. All right, this is fine. All right, so let's say I want to put that window here or down here. I go to Edit Current View. I want it to be in the price pane. I'm going to add an indicator. In the search, type in warehouse. Warehouse field. Cool. Now, this is what gets exciting. I can look at here. I have all kinds of places. I want it in the upper right, so I'm going to put it here upper right. Then I can offset it vertically and horizontally. I can put a box to include it. I can change the background colors to whatever I want. And then I can put anything I could possibly want. So if you were interested in high jump, I think the new oscillator, I already know, it's not I think, I know it for sure. Person, high, closed doji, HGS high jump. I think it's a percentage. High-low jump oscillator. This is going to tell me what my percent is, above or below 0. And maybe I want to know earnings date. I don't, it's already above it, but I want to be able to just show you how to create this. I want to put ERG in there because I believe in growth. And then I want to put in, how about, does it have a high closed doji? So I could put I probably did that wrong. Let me try that again. Search HCD, person high closed doji, and a weekly. Isn't that cool? I could have both a weekly and a regular one on the same chart. And now I'm going to hit OK. And I'm going to hit OK. And you can't read it with those colors, but I opened it up there, so let's go back, edit the chart. And let's go to the colors, box background color. Let's go to something darker. Okay, okay. So you can put whatever you want in there to your heart's content, and I'm just going to leave it at that. What else did I want to show you? A lot of people go, but Jeff, and I'm going to show you my buy list. We're almost done. I like to do these for an hour and stop. If I go to my buy watch list, not a lot of stuff I want to buy in here, but a lot of stuff I want to watch. Many of these we've already looked at. First thing is, let's look at industry groups. I talked about banks. These were some of the banks that I liked. I did like some biotech. I liked Hgsi. Put this on a daily that I actually can see. Pull back to the 50, breaking out, mobile breakout from a squeeze and a kahuna yesterday. Hgsi looked interesting. Last week I liked Jimia and it ran up, then it pulled back. I think it can go higher as well. So I have various types of stocks, most of them in the groups we looked at: specialty pharma, apparel, renewable energy, REITs, insurance for whatever reason looks like regional banks with a little bit of a more of an uptrend, and look like they want to run. Again, they're below the 200-day, and so there's overhead supply. So what I do is I take this list, and I like Wabtec a lot. Trains look good. So I might say Wabtec's the best one I got, one of the better ones I have for buying right away. And I know somebody a block from me is now writing this down. This is for educational purposes only. A mobile breakout, it's in a person buy, had a kahuna, PMC going up, had a weekly high close doji, and this looks buyable here. If I was to buy something like this, and again, I'm just educating, I'm not telling you what I'm doing because it's none of your business what I'm doing. It's none of my business what you're doing. I'm just giving you how I look at this chart and how I would manage it. It closed at 67.23. The high was 67.24. Maybe I buy it at 67.30. I'm looking at the low of this bar here, which is 61.30. That's 10%. That's a little bit much for me. I could be comfortable putting my stop here because I'm buying it because it broke above the 200. Maybe I put the stop on the bottom of this day, which would have been about 62.60, so I can get my stock down to 370 or 5%. That looks like an interesting stock right there in a strong group. Humana, it broke out already, but what an interesting chart. Shallow pullback cup handle breakout, mobile breakout from a squeeze, pocket pivot kahuna and a person buy on the breakout on Wednesday. It's run a little bit, but that still looks good to me. Let's see if anything else stood out. JP Morgan, best of the best. Looks like the other banks. Looks like it's ready to go with a mobile breakout from a squeeze, pocket pivot, kahuna, person buy signal. Again, all of these stocks have overhead supply at the 200-day moving average, and it wouldn't shock me to see some resistance. Now, I take these stocks and I drop them into my trade station, and then I've got various watches here where I look for different patterns. I think this one will have those. Yeah. I have my buy list here, and I'm looking for various signals to come in, whether it's through Q, my Hgsi stuff, Bible gap ups, pocket pivots, or John Person signals. I also, within Thinkorswim, notice this is the only number that matters here, and I should have hid this, 1550. That's my P&L year to date. My net liquidity is down because I'm building a house in Santa Fe. In fact, I'm going out there tomorrow to check on what's going on there. So that will continue to eat up my money, but it's the profits that matter. Life is how you spend them and enjoy them. But in Market Watch, I have a list of my buy watch and some of the different things I like to look at during the day to understand how the market's going. So I have a lot of different ways of monitoring it, and I'm looking for stocks that are breaking out. And I talk about Dr. K a lot. He did something on TradeStation this week that I thought was really good. And he's introduced a new indicator called the combo indicator. But his Laguerre RSI is something that I use routinely, which would be this here. You're looking for stocks that are crossing back above here. If you look at a lot of these signals, they actually were very good signals. All right. He also has the seasonality indicator. So if I wanted to look at 40 days out, for example, I can see some really big earnings coming up. And one of the biggest is NVIDIA. NVIDIA pulled back a little bit, but look at the nice earnings growth that you see here. You can see the next 20, 40, 60 days, what the expectations are. So a lot of things going on. I started this by saying Was this a shot across the bow? It may have been. Was this massive market rotation? Absolutely it was. Is this the end of the bull run? I don't think so. Let's see where the market goes on Monday. Thanks for joining me. Do me a couple favors. If you like this, put the up thumb in YouTube. And if you think the visuals are too hard to see, download from my Dropbox. You might do better. Good night, everybody. Have a great week. And Boone the dog and I say thank you.